All right, hey there. Good afternoon here, everybody. Chris Franks with Texas West Capital. It is just a few minutes after 11 a.m. Central Standard Time here on, what is it? Tuesday, the 22nd of June, 2021. Here in beautiful Boerne, Texas. And as you can see, I've got a little bit different background going on here. I decided to use a different computer, not the one in the office, in another room because we were having all this lighting feedback, is this making this flashing thing. And I didn't want that, messing with y'all or distracting you or whatever. So I've got the green screen up behind me in this other room. And we'll see how this works for you guys. Hopefully y'all are doing all right. If you're in Discord with us, then you had your levels to watch for Bitcoin. And if you're in Discord, obviously I just gave you that quick update as well with the breakdown here that just happened. Beyond what... the earlier analysis this morning, what we had on there. So a lot of update in there. But how are y'all doing here? Who do we got here already? We've got Hank's jumping in. Spiral Architects here. Denny, Nevlusian. Silvio, what's up, man? Mike Kane is checking in from Florida. Oscar, what's up? He says third knock was a charm. Talking about I think he's talking about the Lowe's giving way there. Let me see here. Albert, good to see you there. Let's see here. Data's here. Bitcoin starts dropping and Chris ascended to heaven. No, not quite. We'll see what's going on here. There's a couple possibilities we'll talk about this morning with this move. By the way, guys, I had somebody who follows, retweet somebody else's chart that had Wyckoff on there, a Wyckoff analysis without any volume at all. Just purely price action, and I just want to warn you guys against that. If anybody ever says, hey, look at this Wyckoff analysis, and then they're just showing you something without an explanation of volume on it, it's not a Wyckoff analysis. They're just looking at a pattern. The thing is, guys, your distribution and your accumulation, your redistribution, reaccumulation, all basically look the same. It's the volume and price action analysis that differs them. So if somebody posts something like that, and it works out the way that they were hoping it would, then they're just lucky. But unfortunately, if you're new to trading, or at least new to Wyckoff, you'll think, oh my gosh, they know what they're doing. And they don't. They have no clue. Because if they did, they would clearly be adding, volume in there. It's not a pure price action analysis, guys. You absolutely have to have volume in there. Again, it's that volume and price action that differentiates whether it's, accumulation or distribution or whatnot in that. So I just want y'all to be careful with that, all right? Let me see here. Patch, what's going on? Claudio is here as well. Kimo Zabi is jumping in. Michael Williams, hello there, people. Diego, man, I almost couldn't read that. It's in red on that blue background I have on these things. This is what I see, guys. This is what I'm looking at when I look over here trying to read what y'all are saying. And so when you have like the red on the blue, it makes it a little difficult to see sometimes. But anyway, let's see here. T-Ball, good to see you checking in, man. I'm doing well. Thank you. I hope you are also. I always want to say I'm doing well. I hope you are as well. It just doesn't sound right. Block Tech checking in as always. Bill checking in. Let's see here. Hank says he always warns people for Wyckoff without volume. It just really is, guys. I talk a lot here because whether you join us or not, I want you to learn something while you're here. Otherwise, you've wasted 2 hours, and I'm not about wasting your time because that means I'm wasting my time, and I'm not, those of you who've been, around me long enough, I'm definitely not into that. But it seems like everybody's getting all excited about Wyckoff again. It was the same thing that happened, probably about, back there in 2017. Gosh, I don't remember exactly when. Sometime it was one of those rotating weeks that I've talked about. And so, everybody started doing it again, but yet nobody's learned anything. It's these big accounts that are still just showing you a schematic, and then saying, oh, look, it looks like it, which means absolutely nothing because it looks like the opposite as well. So just be careful with that. All right. Let me see here. Hey there, Devils 2012. Good to see you. Eriquin's here. Says it's great to see a smile on your face, and you've gone through a lot lately. Wishing you the best, but hey, I appreciate it. Thank you, man. Thank you. Yeah, we're trying. The thing about death, when it's a loved one, or I'm a firm believer that you can honor them best by living your best life. If somebody that you care about passes, yes, it's hard and it's difficult and you deal with a lot of emotions and things, but I think at the end of the day, you definitely honor their memory most by living your best life, by going and doing those things that make you happy and that make you a better person, and hopefully that make the world a little bit easier for everybody else. One person at a time. It really is that simple, guys. Everybody wants to wait till they do something that affects, millions of people. And all it takes is a good bit of people just doing something that affects one person positively. Online, it's hard sometimes, as you guys have noticed. There's always people online looking for attention. Like I said, it's like a 3-year-old, and they think any attention's good attention, so they act like, like jerks online because they think that, that makes them, big man on campus or something, and really people just kind of look at you and go, man, I can't believe that guy's acting like that. What an idiot. But, hopefully you guys, y'all understand. I think y'all do. But, had to deal with somebody this morning with that. And by the way, let this be real quick here before we jump into the analysis here. I'm just going to give you this one more time, guys. Don't come and ask me why I blocked you, if I blocked you. I have no qualms at all. I don't believe in this, it's a free country, you should allow me to say what I want. No. You're on my profile. I don't have time to deal with the nonsense. And I will just like that, I'll block you. And I often have people come back and they're all upset. They're all butthurt because I blocked them. That's life. People seek attention. If you're doing something that's going to get you blocked because you're acting like an idiot, and then you're upset because you're not getting the attention you want, well, yeah, guess what? Sow your oats, right? You're just getting what you put out there, guys. I don't know how many times I can say this. But anyway. Oh, let me see here. So, hey, listen, guys, you can jump on here with us. We've decided to keep this going. We've still got interest. So, if you haven't taken advantage of it yet, get a Tier 3 annual subscription with us for 67.5% off the month-to-month rate. So, if you're just paying month-to-month, you're going to pay $199. You can right now get in with that for... Like I said, it comes out to about 67.5% off. It's stupid how cheap it is. But you're going to use code, let me see here, 50% off Tier 3. There we go. So I was going to let you guys remember that, or let you guys see that, know that, you are not going to find a cheaper way to get in with us ever right now. So, this is the way to go. This is the cheapest we've ever done it. But again, my goal, those that are with us know, and if you're not with us, you don't know maybe. But my goal is, listen, if you are serious about learning how to trade, then I'm willing, again, to put my money where my mouth is and, take a whole bunch off it, because you're not going to learn it overnight. It's going to take time. So if you're willing to commit to a year, I'm willing to give you a heck of a discount because I want you to be successful. So, and I think we do it, man. I think we've got probably the best education, trader education online, available. And we've also got an amazing community. And not everybody speaks. We've got 300 plus members. Not everybody speaks, but people continue to remain. Our people are in there on average for over a year and a half. And that's without these yearly things. So, this yearly discount. So, when you're looking at what you can do there, if you came into my profile here today, you'll notice I went ahead and posted a comment we had this morning from a new member right here. He says, to be honest, I was expecting a serious trading group, but what I got is far beyond my expectations. I feel like I'm in an institute for trading. This is a guy that just joined us and looked in there and went, wow. And that's what we get all the time. But, again, I can tell you all day, but until you actually do it, it's just me talking. It seems like maybe I'm just trying to get your money or something. But jump in there and try it, man. It's pretty great. I have to admit. Hey there, cue the action. Tell you, Ryder, what's up? You reap what you sow unless the chickens come home to roost first and eat it all. Oh, man, chickens, right? Man, Cane's. That's some good fried chicken right there. Chicken strips. Anyway. Let me see here. Let's check this out. Kevin, what's going on, man? He says, how long will this bounce back last? Well, that's what we're about to look at right here, man. Hey there, Chris Baker. Good to see you, buddy. Rasta, what's up, man? Checking in from Prague, Czechoslovakia, man. New member as of today. I love it. I love that we get everybody, especially from, over there across the water. That's pretty awesome, man. Let me see here. ARM, what's up, man? And Jared the Great is here as well. Leighton Stone Blue, what's up, man? Checking in from London as always. So here's what we got, guys. So, I mean, here's the big picture, okay? This is the count I finally have, I'm off of at the moment, and we're trying to see if this works out. And basically, this one says we've got from the December 2018 to June of 19, we've got the wave 1. March of 2020 is wave 2. Excuse me. And then coming off of wave 2 here, I think we're only doing wave 4 of 3. I mean, it's possible we're doing wave 4, but I think it's wave 4 of 3 at the moment. As a matter of fact, let's go ahead and grab the retracement tool here and see where we're at. Oops, I've got the wrong one here. Let me try it again. Oh, there we go. Wave 2 right around this area. Potentially something like this. This whole area right here has a few different interpretations, but we're going to go with this one for right now. As you can notice here, with this interpretation, and with this being, instead of being an ending diagonal, with this being a potential flat correction here, which means we got 3, and then we have an A, B, C down for A, B, C up for B, and then 1, 2, 3, 4, 5 here for C. Notice we're right there at the 38.2, guys. That 38.2 is the 38.2% retracement of wave 3 is what you're looking for wave 4. So there's a good possibility that what we just did here was enough to complete this down. As a matter of fact, when we zoom in here in a minute, you'll see that we've actually got enough waves here. We've got 5 waves down here. You can count 5 waves down. And it breaks down below wave 3 here. So that is technically all you need to complete wave 5. Now, normally the wave 5 target is going to be, closer down here around 23,000. Because, what you'll do is you'll go here and you go, okay, well, here's wave 3. And then you'll measure wave 4. By the way, this is wrong. Wave 4 should be over here. It's a flat correction here is what I'm looking at for this. So you got wave... No, I had that right. God dog it. Yeah, I had that right. Yeah, because you have wave 1 up, or wave A up, and then A, B, C for B here, and then 5 up here for 4. Oh, okay. Sorry, that's what I was saying here. Yeah, so, again, you do your wave 3 here, bring it down to wave 4, and then let's take that off there. Anyway, and then you look for the 61.8, and your 61.8 actually gets you right here around 21,300. So normally, if this was a 1, 2, 3, 4, we're looking for a 5, we might be looking down toward those low 20s, right? But I think enough might have been done here to finish 5 and go up. So now we just have some levels to watch as we break through them, gain some confidence on that, all right? Chris Day, good to see you, buddy. Jazz, what's up, man? Christian's here as well. Oh man, yeah, buying that Bitcoin there, huh? Let me see here. Lewis Winthorpe, what's up, man? Good to see you checking in. You're reading VPA? Yeah, VPA is a little bit different than Wyckoff, but same general idea as far as price action and volume goes. So you can't go too wrong with it, for sure. What's up, Gata Mark? Good to see you. Yeah, so I mean, this is where we're at. Let me see here. Yeah, so I've got that right here with the daily right now. Possible bullish divergence right here. As you can see, we've got higher lows on the oscillator. We've got lower lows right here in the price. We're also just dropping into oversold, but it depends on where price gets by the end of the day. It's possible this could pop back up. So, we'll have to watch that. This might not make it into oversold, but they're going to get pretty close to it. And so again, it kind of still gives you some good possibility that price is going to continue, to rebound off that area here. It's right over here, your previous wave 4 over here. So again, your wave 4 often pulls back to wave 4 of the lesser degree. So again, this is kind of where we're at here when you look at Elliott Wave. So makes a lot of sense for the target there. If this is, then we're looking for a wave. Let's see here. We're looking for a wave 5 of 3 target, minimum at 78,400 or so. Secondary target up at about 107,000. But again, this would just be wave 3 or wave 5 of 3. So you have one more pullback and then one more higher up still to go, regardless of which area went here. So yeah. Let me see here. Catch up with you. Do you think we have hit our bottom? Ashir wants to know. I think it's a possible. Anybody that tells you, again, when you ask somebody their opinion, you've got to be careful with that because there are no guarantees in trading. So I think we may have, there's a possibility that we may have. Let me zoom in here and show you what we can do here. As a matter of fact, let me get to the other chart here where I've got the count. So I had a black count, and then with this strong reaction off here, I added this red count in for as well as an alternate. And this red count's the one that interests me. This red count suggests that we've got 5 done here. Now, again, 5 waves down that drop below wave 3 over here is technically enough to say that wave 5 is complete and we're going, okay? But it could also just be wave 1 of 5. So now we have to see where does this go from here. So the first thing we're looking for is a breakout above this swing high here. So if we get this red count here, we go 1, 2, 3, 4, 5. A breakout above this swing high at 33,266 and 30 cents here on Kraken will be a good first clue that the bottom may be in. If you can get impulsive breakout above the pivot, that's going to add a whole heck of a lot of confidence to your count. But ultimately what you need is a breakout above this up here. Above 41,341 and 80 cents. If you can get above that, that says the bottom's in, 5's done, we're headed up. So those are your levels you watch. You watch this wave 4 right here. You want an impulsive breakout that remains above the pivot. And then you want to break out above the swing high up there. So yeah, I mean, that's kind of what we're looking at there. Let's see. Oh, let me see. I'm just trying to see if there's anything else I could show you here. You were saying the volume, Zero, what's up, man? He says you were, the volume on the reaction from the bounce doesn't look that convincing. Thinking we go back down to 30, to at least 30. Let me see here. And you're looking at the 1 hour chart. So I'm looking at the 1 hour chart. Yeah, so what happens normally, in most cases, your greatest volume comes on the drop itself, not the reaction. Because basically, the drop itself is where supply is kind of going all in, right? Okay? And so usually your heaviest volume will be here. What you're interested in is seeing what is the price and volume relationship on the move up with the move down. And what I mean is you see we get this large spike right here on this one, right? That's the breakdown right there. That's why you have the large spike. So you got large candle spread, large spike of volume. Volume drops off to about 3/4 of that maybe. Much smaller candle spread. So you already see this starting to change. You're starting to get a little bit, even though overall volume's going down, in relation to the candle spread that's there, you're getting a little bit more effort, a little less result here. And then you notice it drops down to half what it was 2 candles ago, and all of a sudden you have this bullish engulfing candle breaking out up. And usually what this is going to tell us is that supply side is exhausted. So you don't need a ton of volume to push it up, because you don't have to have a ton of demand fighting against that supply. The supply is just really, it got spent on the way there. So as you can see, you're getting these Nice large candles here, and your volume's dropping off, but your candles, are still staying around where they were or larger, so you're getting less effort, better result. Over here, you were getting, at this point, you were getting down to less effort, less effort, and even less result. Overall, just giving you that turnaround setting up here on that. So that's the way I'm looking at that volume and price action right there. But you definitely want to see that follow through, again, through this red wave, red circle wave 4 here. And really, again, the idea of the pivot here is just this idea that, if you're breaking out above that impulsively and you remain above it, everything else aside, just trading pivots. Remember, what usually happens is we came in sideways between the pivot and the S1. And because we went down to the S1, we look for a bounce off the S1 to head back up the pivot. If we don't get it, we look for the S2. And if we get the S2 and it pushes up above that S1, usually that means we're going to try and target the pivot. And if we break out of that pivot from below like that, within this S2 range, it usually means that this is the bottom and we're probably going to run all the pivots up. So if you're looking at trading pivots rather than Elliott Wave or Wyckoff or whatever, this is the way I would read it. I come in sideways here. I'm looking for a confirmation or rejection of the pivot. Either that or I'm looking for just a strong continued push down. We didn't get confirmation or rejection of the pivot here. We just kind of hung around the S1, dropped the S2, rapidly moving back up above the S1. So if we continue up to the pivot and we break out, that should signal that we're headed up and we're going to run these pivots here, which means we should be getting up, 45,000 or 55,000, somewhere up there in that area. So that's what I want to see. Again, this is a blend of, again, using Elliott Wave levels to kind of note your movement up, using price action volume analysis down on the bottom to give you hope. And then, of course, using, pivots here to kind of really settle it in. I mean, you could look at it also as a breakout above wave 2. If this is 5 waves down, then breaking back up against wave 2 tells you that this is 5 and it's done. And it sets you up for a possible breakout above the top there. So anyway, you're kind of looking at it. There are multiple ways of looking at it. And they all kind of give you that same result there. Do I ever look at the BSP raw indicator? It breaks volume into buying and selling pressure? No. No need to. Volume is volume. This idea of I think if when you're trying to, I'd have to see how they're deciding what buying and selling pressure is. At the end of the day, volume is volume, and you use volume with your price action here to define what's going on between buyers and sellers, like I just did a minute ago. You can see, are you exerting more effort and getting less results? Does it flip? These types of things that has the follow through. So, I mean, I don't know that I would necessarily ever use something like that because I'm so used to doing it the way I've always done it. But it always concerns me when somebody says breaking things down into volume and buying pressure as to how they decide what is buying and what is selling pressure. Because at that point, it's some human calculation that needs to be done. It's not an absolute. It's some kind of human deciphering of what's going on that determines if it is one or the other. So yeah, I'd have to see what how they determine what's buying and selling pressure. Yeah. Let me see here. Well, let's see. Let me see here. I don't like this pullback so far at the moment here. That kind of sucks. But there is room still here on the 1 hour Stoke RSI to kind of get up there. It's just now flirting with overbought here. So it's got room there for price to continue up higher. Let me look at the 15-minute here. That's definitely a bit of a pullback at least. You've got a reverse dragonfly type doji here, which has got this long upper wick, small candle spread down toward the bottom of the candle there. And then you have a potential confirmation right here. We are topped out and curled back down from overbought here in Stoke RSI. RSI almost broke out into overbought. Let's kind of zoom in a little bit more, see if we can get something looking on here. You've got a 1, 2, and then maybe a 1, 2, 3, 4, 5. So 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4, 5. Yeah, I mean, looks like we've got 5 up, so we'd look for 3 down locally here. Let's see. We've got the 61.8 right around. You notice I've got this green channel here, which is basically what it almost bounced off the bottom of. Remember, this is the same green channel, the same green demand structure that I've had in there for a couple of weeks probably now, right? And we bounced right off the bottom of that. So if we're pulling back, I'm probably looking, I don't know, you've got this high volume node right here around the 70.5, which is right in this area where we have this previous resistance. So I could potentially see it doing 3 waves down all the way that far. But somewhere between there and the EQ here at 30,480 or so. And 29,975. So about a $500 window there is where I would probably look for a bounce if we're going to. If this is just 1 up and pull back for a 2. Let me see here. If we get all the way down to that 70.5, that'll give us then, now either this is going to be an ABC, which would then we'd look at 33,966 and a rejection back down below this swing low that we're trying to build here. Or, we're going to continue up to 1618, which is 36,424 for 3. And then 5 as a minimum, 37,944 there on that. And if you're getting 5 up, then you're looking for 3 back and 5 more up at least. And so again, you start looking at those levels I was already talking about to kind of see if, okay, are we breaking out and moving up there, and how's our count going from that? So yeah. Let's see here. Joy says, are Elliott Wave and pivot signs taught extensively in Tier 3? Yes. I do. As a matter of fact, we have, not only do I have just the general Elliott Wave education, but every Thursday at 3 p.m. Central Standard Time, I do a live stream for Tier 3 just on Elliott Wave. And if you can't make that or whatever, you want to look at it again, it's always archived and you can ask questions afterward and do all that. I also do a tips, tricks, and technique live stream on Wednesdays. And I do a, starting this week, we started doing Wyckoff on Mondays. So if you're Tier 3, you get, 3 hours of streaming every week just for you. 1 hour of each of those. In addition to all the other education, everything that we've already got. So with everything that we've already got and we've done and archived and everything, we've got well over 100 hours of educational content right now. So whether you're brand new or you've been trading for a while, you're going to find something to help you become a better trader with all that. Mr. Densley, what's up? He says this is a fake out. It's possible. It'd just be a wave 2 on the way down. It's definitely possible. As you can see right here on the 5-minute, we're just at that at the pivot. So you expect that pullback. So yeah, we'll see how it goes. Like I said earlier, we've got the levels we're going to watch for breakouts that are going to increase our confidence in the idea that maybe a bottom might be in. But if they don't and they head back down through those other levels we talked about, then that's going to tell you, of course, that we are headed down toward that 23,000 area. Unless, of course, the waves themselves shorten up on the drop down, which they could always do. But nonetheless, it would still be down further. Yeah. Let me see here. So yeah, we'll see how this turns out here. We definitely need to see some, again, through wave 4 here first. And then we want to see, and by the way, guys, if you don't know what I mean by impulsive, we're kind of this. We want to see larger candle spreads like this. And we want to see volume expanding as it's pushing through this 1 hour, 4 hour pivot here. So, wave 4 here is the first one you want to get through. And then you want to see that impulsive breakout above the pivot. And you want it to remain above the pivot. And if you can get that, just everything else aside, just trading pivots, that's a pretty good clue that the bottom is quite likely in. But you still need to get above this swing high up here to kind of seal the deal and say it's in. Yeah. So we'll see. Like I said, it's a short wave 5 right here if it is. But with 5 waves down here in the red count and dropping below wave 3, it is technically enough to say that wave 5 is complete. But the other call, just so you guys are sure, the other idea is that this is wave 1 of 5. And again, in that case, it shouldn't really get above the pivot here. It should get rejected around this pivot area. You see the high volume node right there about 35,770 up to the pivot up there at about 36,827. If this is wave 1 and this is wave 2 of 5 going down, it's most likely going to be rejected right in that area at the most. It may only make it to the 50% here. But it shouldn't really, I mean, it can go, technically it could go above the pivot, but we should expect to see it get rejected in that area here at the most and head back down if it's only a wave 2 of 5 heading down. Okay? So we'll see what happens with this here. This was a good start, but we definitely need follow through higher. No two ways about it, guys. Let me see here. Wave 4 has a lot of room here still to go. If we look here, we've got, look at this. Look at this bullish divergence right here between these two swing lows here and these two oscillator lows here. So higher lows, lower lows, bullish divergence coming out of oversold. Large volume. This is a nice 4-hour candle. It's a pause, potential reversal, but you need to see follow through on this 4-hour candle. You want to see a nice demand spread, a larger spread candle closing in the next 3 hours and 20 minutes on that. And then, of course, we've got a ton of room here on the 4-hour with Stochastic RSI. If you're looking at the daily, again, we've got just slightly higher lows here on the daily. Slightly higher lows on the oscillator. Definitely lower lows on price. Gives us bullish divergence on the daily, slight. And daily Stochastic RSI, of course, is dropping into oversold. And we'll have to see how does that close at the end of the day there on that. Let's see. Lavo. Yeah, buddy. Just now talking about that. About that bullish divergence there. Sure. So, daily candles looking potential-ish. But, you do want to see this kind of... The higher up this can close, the better this is going to be on the daily. 3-day, I believe 3 days got... We've got bullish divergence here on the 3-day right now. But this candle just opened up yesterday. So it's got until the 23rd still before it closes. It opened on the 21st. It's got until the 23rd. But if we can get that, again, we might have this bullish divergence coming off in this area as well. Weekly, not a whole lot extra to add in there. What I don't like, I think I pointed this out last time. I'm going to be honest with you for right now anyway. If you look at the quarterly, I don't like that quarterly. Because generally when you have a, whether it's up or down, when you have a trend, and then at the end of the trend, there's a candle that, closes more than 50% below the previous candle, it's usually a hint that the top, in this case, the top might be in. So kind of like what we saw right here. This is 2015 going into 17. And then you have this candle right here, which closes more than halfway down, and then we continue down, right? So I would like to see this continue up higher. I'd like to see this close as high as it possibly can over the next 8 days that we have left in this month and quarterly here. Because otherwise, it weighs heavily on that upward advance. It doesn't mean that it has to reverse, but it starts adding a lot of support to the idea that it might have topped out there. So, yeah. So again, still want to watch that as we're doing that there. Let's see here. That yearly candle is not very pretty. But lucky for us, it's got another 6 months still to go. So this could, end up much better. But right now, it's an awful yearly candle. But again, like I said, still so much time before the end of the year. Nothing to really write home about or be concerned about there. Let's see. On linear? No, I'm not going to do that yearly on linear. I'll take your word for it. Let me see here. So that's where we kind of are with that. The other big thing, of course, you should be paying attention to is the DXY. Let me see here. So we were looking at potentially a 4 here. We're getting a bit of a sell-off right now, which moves our wave 4 over. Let's see here. Now I have to look at this. Now I have to look and see. Let's see here. We should have that above 90%. It's 85.4. It could potentially be your A, your B up here without being a flat of any type, and then we've got C here, which I guess wouldn't be an AB. It'd be A, and then A. Oh, let me see here. No, 1, 2, 3, 4, 5 gives us A down here. That's what I'm trying to get to. And then B up here. And potentially C working here. In which case, locally, we'd be looking at the S1 pivot here, which is right around the EQ of this demand structure. So we'd be looking to get a 1, 2, 3, 4, 5 down here, at least to that area. Let's see. Yeah, see, we can see that right here. Let me see, going by this count for this wave 3 right here, the 38.2 is right here around 91.48. So we could even see it coming down to that area. But this area is pretty close to wave 4 of the lesser degree here. You know, I guess it's always possible. It's always possible we can have our 3 like this with our 4 here. And then we've got our 1, 2, 3, 4, 5 heading up here to finish off 3 there. But, you know, that right there just, you know, again, makes it even more likely that we'll probably hit this area at least for the move up, if not, it says 2. That's the S1 pivot. So dropping, you know, getting rejected around the pivot, hitting the S-pun and rallying back above it would tell us that the bottom's in and wave 5 is headed up there higher still. So, yeah. And so, you know, again, you want to watch this, you know, as I continue to warn you guys, I don't. So Raul's not an idiot, okay? With Real Media, Real Vision, right? Isn't that what it's called? Real Vision. He's not an idiot. Former Goldman Sachs guy. You know, he knows what he's. You know, he understands a lot. I'm a little confused though with him. Because he sent out this tweet. Let me show you something here. He sent out this tweet not too long ago. Talks about this possible head and shoulders here on the euro, right? Euro USD. Well, as we know, the euro USD makes up about 58% of the weighted average price of the DXY. So generally, the DXY follows opposite. You know, they generally kind of track opposite, right? Which means if you were getting this as, you know, a head and shoulders, you potentially got an inverted head and shoulders setting up on the DXY, right? So if you break down here, that means the dollar goes up. But he's a smart guy. He knows if the dollar's going up, that assets denominated dollars or risky assets, whatever you want to call them, are going to generally go down. But yet, in his thing here, it says still bull on crypto. He says, of course. Now, I don't know what time frame he's talking about, but it seems locally, at least near term here, if you're going to get this breakdown and you're going to play this, you know, this head and shoulders here, then you know the dollar's going to go up proportionally. And that means that things like Bitcoin and whatnot are going to have an issue, right? Because that's what happens. So I don't understand what his thinking is here or what kind of time frame. Let's see here. Maybe he's got some in the replies now. Oh, this guy thinks that, I mean, that's a weird way to look at it. A strong dollar will cause emerging market turmoil, inability to pay dollars denominated debts, further accelerating rush to BTC. No. If they can't pay dollar denominated debts, they're going to the US and the IMF. They're not jumping into Bitcoin because of that. This is a complete misunderstanding of how large countries and whatnot work. So yeah. Let's see here. See, yeah, right here. See, relative to the euro, the dollar would find renewed strength. The DXY would go up. Yes. See, this guy's got it right here. Likely mean paying for risk on assets, including crypto. Same thing I've been telling you guys for the longest time. So I don't know. I'm not sure if he's just. I think when he says he's still bullish on crypto, I think that may be like a long-term position because he's not a trader. He talks about the long game with crypto for him. So we'll see. What's up, Ryan? Good to see you checking in, man. Jay can play. I see you there too, buddy. Hank says bullish summer for the dollar, but longer term, I'm still betting on the mid 80s. Again, let's jump over here. Remember, my big thing that I've been telling you guys is we need to see price or, points here getting above this 94,741. This is 5 waves down, then there is no, Okay, I can't say there isn't. If this completes some kind of, if this tops out instead of being an A, a B, and a C here for wave 2, a flat, if this topped out, like a wave 5, this could be a wave 1 down, and then you get 3 up for wave 2, and then you can get your lower. Let me see here. I'm not sure how you make that happen with this count, though, here. What's going on here? Because the way I'm kind of looking at this, the other way I'm kind of looking at this count here, well, I've got this count from right here. But, so if we go up here and we go, okay, 1, 2, then we have 1, 2, 3, 4, 5, right? And then we have ABC down. And potentially, this could even be, oh, I've got it here. Yeah, I've got it. But it would be A, and then B, and then C here for B. So again, it's A, it's B, and then it's 5 down to the low here, which is what you would expect for C for a flat correction. A flat here. So again, the idea is that we would have a 1, 2, and then 1, 2, 3, 4, 5. I'm sorry. 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5, right? Oh, wait, no. Let me see here. I got to think now. No, okay. So this would be a 1, 2. And then this would be a 1, 2, 3, 4, 5. So that gives us a 1, 2, 3. And like I said, this becomes a flat correction. So it's potentially ABC down, ABC up. So A, B, and then 5 down here gets you C. And a flat correction, you're generally looking for wave C to end where wave A ends. And that's what we have right here. So just, kind of what I'm looking at. Yeah, complex correction, always possible, but, a complex correction you really don't look at until you wear out the possibility of the simple things, the more simple ideas. So, yeah. The complex correction is kind of like the leading or ending diagonal. It's the exception, not the rule. So, yeah, I mean, definitely possible, But, you know, I would have to see, you know, the less complex correction taking, you know, being invalidated first. I think with Elliott Wave, people tend to often try and make it much more difficult than it has to be. And so, you know, and they tend to do that because they try and make it fit some kind of narrative they have. But most of the time, Elliott Wave will follow a pretty simple, it'll follow the more simple idea most of the time. Yeah. Yeah, I remember that, Hank. I got it. Trader Tex, what's going on? He says 100 is top side of range, 88 bottom. The closer we get to 88, the more bullish we become. Yeah, sure. You know, again, definitely possibility on all that. You know, I just, you know, using Elliott Wave, I need to see that breakout above that wave 4. What I have is that wave 4. From a monthly perspective, we could be bottomed. We definitely have, well, actually, we've got confirmation of this bullish divergence here. See this move up and the pullback? It'll be more confirmed if we can get back, if we can close back above this for a month, because then we've got the back, the pullback, and the up. But we've got the lower lows here. I give it over here. And we've got the higher lows right here. And at that time, you know, Stochh RSI dropped down, almost bottomed out and oversold. And we're heading up here. So, I mean, I think on a macro scale, there's a good chance for it. We definitely need to get, you know, we need to close above the pivot and stay above it on the monthly. But, you know, again, on the shorter time frame, I talked about the possibility of this also being a double bottom right here, which gets us that target, screen target right here at 97.626, which takes us above the wave 4 at 94.741. This, you know, and that would make this double bottom kind of this Adam and Eve double bottom right here. So yeah. Yeah, I appreciate you, trader. Thank you, sir. But you know, again, no guarantees here, guys, at all. No guarantees at all. As a matter of fact, you know, where we're sitting here, this could always be here's the thing, guys, until we're breaking out above minimally this swing high up here, because remember, we're looking at this as a leading diagonal, 1, 2, 3, 4, 5. So until we actually get above this wave 1, it's possible this is a wave 1 instead of 3 down is somehow 5 down, and this is just 3 up. So then you get a 1, 2, and then you're heading down for 3. So, I mean, you know, again, guys, I don't want you, if you're new, just come in here and say, oh, he's just this way about it. No. I'm telling you what I think based on what's going on, but we still have validation and invalidation levels that the price has to, you know, get through to kind of give us some idea of what may be more likely going on. It's making a good possibility here, but no guarantees at all on that. Yeah. Let's see here. Lava says, well, at least we are about to close above the 1 hour S1. So that's something, right? Let's see. Where's that over here? The 1 hour pivot here? Or are you talking about on Bitcoin? Let's see here. Oh, okay, Bitcoin. You're talking about Bitcoin, right? Yeah, the S1 pivot's right here. Just pushing right above it. Got about 3 minutes left. Yeah, but you know, again, you want to see it hold. And the fact that we push up above it, but we're not above this resistance right here, means that we could just get rejected and head back down. Yeah. Whoops. Let me see here. Oh, they're back. We'll just keep blocking them all. No, I don't want to become famous. I'm not interested. Especially if it involves buying. Why do you want people to buy? Why do you want to buy people watching what you're doing? I mean, it's like, oh man, you're just asking to you know, to just waste money. You know, I want people who are going to follow because they're interested to follow. You know. Let me see here. Let me kind of catch up with you guys here. I think I'm all right here at the moment. So anyway, yeah. So again, need to get that pop out above there. The Dow Jones right now is looking interesting, but still of the three that, you know, that we cover on a daily basis, intraday basis there at TWC. The Dow Jones is the worst off of the three. The NASDAQ is the best off, So right now, we've got a possible, it's possibly 4 down or 5 down here. We definitely drop below wave 1 and wave B here. So, we had wave 1 and then an A, B, C as an expanded flat, or expanded flat here, or flat for wave 2. And then probably done with wave 1 here. If this is wave 1 complete, you should be expecting price maybe to hit up here around. See, you've got all this activity over here. I can never find this box when I'm looking for it. Right around this area here. You see that? You see how we have the resistance? Oh yeah, look at here. See, it's all resistance here, and then activity, 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 activity. I mean, so this is kind of the area. So basically 61.8 to 78.6, for which is what we normally look for. You'd expect that in 3 waves. So you get up here in 1, pull back for 2, and then you got 3 up to that area. And then you should expect to drop back down. But it's got a long way to go. The only way that you start looking at maybe this not being the top up here is if you get a breakout above this swing high right here. And even then, it's still possible it could be rejecting a head lower. I mean, you obviously have to get above the all-time high to really kind of say it's not, but your first clue would be a breakout above this swing high here. As long as you're below this swing high, this count, I think, is as valid as it gets right now. Let me see here. So that's that. And so if we contrast that to what's going on. Now, remember, your Dow Jones is a much more broad, what do you call it? Is a much more broad-based index. So, as opposed to NASDAQ, which is very tech-heavy, right? So, if we contrast what's going on here, which means overall market is hurting, right? And we contrast that with what's going on with the NASDAQ up here. Now, remember, the NASDAQ is much more tech-heavy, right? And you notice we're about to break up and head up higher here, potentially. We're getting the breakout above wave 3, so we've got wave 5 in progress. We're going to get a higher high on that, unlike the Dow Jones, which looks like like we're going to have that lower low still coming in, like the top's already in, right? So we've got this breaking out with some possibility of higher move up here, which basically all this means is and this is really moved by just the bigger tech companies in the NASDAQ. And so as if they're going up, the NASDAQ's going to continue going up, which will be different than the Dow Jones, which is going down, of course. And then, of course, you get the S&P, which is right between them. And so if we look at the S&P E-minis here, so they're not as broad-based. They've got more tech in them than the Dow Jones does, but nowhere near as much as, say, NASDAQ. So they're kind of in this area here, which may or may not be, right? So we look here and we go, maybe we've got a 1, 2, 3, 4, 5 here, which would give us 1. And then we get an A, B, C here for 2. So as long as price gets rejected and drops back down here before it gets to the swing high up here, 42.58 and 25 cents, as long as it does that, well, then we're going to head higher. But if we get rejected before then, it breaks on down here, then this kind of count sits here, and we're looking for this wave 3 down here, 40,000, just above 4,000, I'm sorry, over here. So, looking at toward this wave 4 swing low. So, yeah. There's your 3, we track these intraday a couple of times a day, and you can see how the market overall is acting or reacting. Just because everything goes into tech doesn't mean the market's healthy, right? Do I think the spike in commodity prices could be helping weigh down the Dow index since there are more manufacturing based? It's possible, but just the Dow in general is more broad based. Again, the NASDAQ is very, very tech heavy. And we know that techs have been what's been pushing everything for the last year or two, really, right? I mean, especially the last year or two, but really, even throughout this whole kind of last 10 years or so, tech has really been kind of like the driving force overall. So yeah, I think it's more probably just a a fact of the Dow Jones being so broad based more than anything else. But again, the spike in commodity prices could be weigh it down a bit as well. It could be, kind of adding into it. Sure. Do I mind sharing my settings on the VPVR? Yeah. Let me see here. What do I have on this? Oh my gosh, I can never. Oh, the way they change this thing now. Can't just easily click anymore. So I use 17 as my percentage of the box width there. Placement of right, of course. Under inputs, I have 384 as my row size. And yeah, of course, number of rows, the rows layout. So yeah, that's what I got there. And this is the up-down volume separated here. But you could just do the total and you'd be just fine with that as well. No big deal. Just force a habit using the up-down there. But yeah. Let me see here. Yeah, so I mean, that's kind of where we're at here. So I think your S&P kind of shows you overall with the market there, but with a little bit leaning toward tech, it helps confirm the NASDAQ tech move that says, hey, techs are kind of leading all this. But again, if you look at that at the Dow, where you have that much broader base of companies that are in it, you're showing that overall the market isn't very healthy. Yeah, you're welcome, man. Sure thing. Let's see here. So now we've had this strong bit of sell-off locally here on the DXY. Again, with the idea that we may be headed down here. Let me see. I'm just trying to see if there's another way in which we could potentially read this. That might give us a different count. You got your 1 hour almost into oversold here. Stochastic RSI dipping into oversold. 4 hours got room to go, though, if you wanted to wait for that. Now, see, here's my one issue with going down to 38.2 is that you have to break down below that 1 hour and 4 hour pivot, as well as this demand structure, this supply structure here, which we went out and came back and retested the EQ of, came back. We would generally expect to find support here and then take off higher. Let me see here. Maybe let me see this going on here. And it looks like we got a 1, 2, 3, 4, 5 here. Okay. And then we've got ABC here. I almost wonder if maybe I don't know, that's a large move up. I would wonder maybe like a 3 down, 3 up, again, a flat here. And then 1, 2, 3, 4, 5. When I'm looking at this seems much more like a 1, 2, 3, 4, 5 here. What we're getting on. And if it's a flat correction that starts in this area, then that would be where we'd look for it to end. Potentially a bit lower here. But anyway, that's going to be the target right there. We'll see if it holds up. So this might be like a 1, 2, 3, 4, 5 still to go here. As long as, and the reason why this is important is because as long as the DXY is going down overall, Bitcoin's going to have a much more easier movement up. It won't have that DXY pressure, downside pressure on it. Let's see here. What do you think led to the rise in commodity prices? Lack of a solid macro trade on the indexes, maybe? I think it's just a bunch of everything. Everything rose, right? I mean, if you think about it, it's not like the indexes or the commodities were the only thing that went to, they went crazy, right? It was part of everything. Bitcoin went up, commodities went up, stocks went up. I think it's possible. It's just that inflationary spike before a deflationary crash. So basically, the commodity prices run up because everything else is running up, right? And everybody's trying to find somewhere to put money, and everybody thinks, they misunderstand what's going on with money printing with the Fed. As I've explained many times on here, and so they think, all this stuff is going to go up because the Fed's going down, right? The Fed's printing too much money. Hyperinflation, all this silliness, right? And so then they run it up, and the Fed is just like, well, we're just going to sit back. Inflation's transitory. We're going to let it run up. It's fine. And then they go, oh, crud. It's not fine. We need to react. And in which case, as the markets are already shifting downward, the Fed raises interest rates, because that's all they're going to be forced to do it. And then you'll see that deflationary bust come in. And that's what I'm thinking may happen. So this gives you, that inflationary spike right before the deflationary bust. And then I think we probably move into something like, as I've talked about before, maybe stagflation before inflation really even kicks in. So we'll see how that all hands out. But, at the end of the day, Japan's lost decade was QE induced. And even though the Fed is approaching QE in a slightly different way, it's still the same idea. So do we end up getting a lost decade ourselves? Do we end up in stagflation for a while? So we jump into this, we drop into deflation, we bust into that, and then we spend years going sideways in stagflation. So this gives us this multi-year bear market where price just doesn't do anything, and it's too expensive to do anything, until it works itself out. I think that's very much a possibility. Yeah. Do you think the big FOMC candle might want to be filled in like a gap? That big FOMC candle. What are you talking about on, Denny? Which chart? Are you talking about on the DXY or what? Let me know. Let's see here. Okay. Oh, on the DXY? Let me see. Where's my DXY chart? Here we go. And are you talking about daily? I think you might be talking about daily, right? Talking about this one right here? It's possible. I mean, it's possible. I would look for it to make a little bit higher up before it comes back, though. And just looking sideways, this area right here should probably catch the fall here. So again, looking for that fifth wave up. I'm still looking for that fifth wave up. Now remember, we still have this gap up here on the daily as well, back over here from April 6th. All the way up here around 92.89. And that's pretty close to where I've kind of got this fifth wave target at. And so if we do something like that, yeah, see 61.8 right at the bottom of this yellow range here. If we fill that gap first, gets you a little bit in that 50 to 61.8 is right there in the yellow range. So I mean, again, that's kind of the thought right now. Yeah. That's what I would look at. I mean, the other way to look at it is this, this big move. Often these large candles like this, we don't have volume with it, unfortunately. But when you have these large candles move like this with the expanding volume, that usually tells you that's a wave 3. And so again, I'm looking at this as part of wave 3 here, and this being a wave 4 on this pullback. So yeah. Let me kind of catch up with what you got here. Common Man, what's going on, buddy? Your opinion regarding Kathy Wood and investing in disruptive industries? She has quite the cult following. So everybody right now has money to just throw into everything, right? That's why everything's going up. That's why, your commodities are shooting through the roof, and stocks have been shooting through the roof, and crypto's been shooting through the roof, over this past year, because everybody's got money. They're going out. People are like, you know what? I'm going to quit my job. I'm not going to go back to work. That's what they're doing here in the U.S. I deserve better pay and a better job. Even though I'm not qualified for it, I deserve it, is what the kind of thinking is going on. And I think that's, that's just this idea that everything's going to continue up. And so, as people tend to do, especially in what they feel are good times in terms of their wealth or financial position, they tend to group, to cult into things, And so it doesn't surprise me that, we'd have that same thing with Woods there. And she is deflationary. She's in the deflation camp, but I think if I understand her right, I haven't really read a whole lot on it. I've just had a few glances at it, but it seems like she's more deflationary as a result of technology, not as a result of anything else that's going on. So if we understand technology, then we know that technology is deflationary, right? We know that technology, creates this deflationary effect, right? Because you don't need all the people in there. It does more with less. And that's a deflationary effect, right? That's the doing more with less. So I think, that's kind of where she's headed with it. Disruptive industries are disruptive as long as the market allows them to be. So the problem with disruptive markets is that if the entire market itself nosedives, you remember disruptive industries are more of this kind of like this side thing, right? They're this extra thing that kind of happens when the market's doing well, right? Everybody's got a little extra. Everybody's got extra money, extra time. Everybody's willing to throw in a little extra to kind of get these potentially disruptive industries moving, right? Which, what we're talking about, Bitcoin, right? DeFi, stuff like that, right? If you think in terms of that, bringing it to crypto. The problem is, once the entire market is looking really sour, these disruptive industries, most of them will kind of just fade out. There might be a few that remain, but there's no more excessive liquidity to go to support them. And disruptive is great as long as everybody jumps on it and continues on. But when everybody pulls out because of the way, the market's going, the economy and whatever, those disruptive industries, most of them won't be able to support themselves. So all this extra liquidity gets pulled and they kind of die off. So as long as it revolves all around that extra liquidity that's around the markets right now, I think. As long as it's there, then that kind of thing continues to be okay. But if that liquidity gets pulled, which we're seeing banks themselves are already tightening. We see that going on there. We looked at the other day, last time, about the reverse repo and the record levels we had on that. Remember, reverse repo is pulling dollars into the Fed. Repo is sending them out into the market, okay? Reverse repo is taking them back into the Fed. And so, again, you're pulling dollars back in. So, yeah, like Hank says, the trick is to make disruptive normal before it happens. Yeah, and then you've got a chance at lasting through it. But as long as you're just something that gets money because they think maybe there's a chance and it's risk on, then the minute it goes risk off for any, period of time, you're not going to have any liquidity to continue. So yeah. I appreciate you, man. Let me kind of catch with you guys. The last what here? Oh no. That Siege Killer. Okay, having trouble reading blue on blue. Man, don't get old. It's a trap, guys. No, really, it's good if you're getting old. It means you've lived as long as most people don't get there, right? What would you say to people who state the Fed is in a box and can't afford to raise interest rates as they want maximum employment, etc.? They were already lowering rates before the pandemic struck. May think they won't be able to do much. Many think, well, they're going to have to raise rates. I mean, it's not that that they can't afford to raise them. If the rates need to be raised, they're going to have to raise them, period. Right now, they've been jacking around with the yield curve, which we've been talking about for the past probably year, pretty extensively for the past year. But yeah, I mean, they want their maximum employment because they've got that dual mandate. But you can only do what you can do. You can want what you want as much as you want it, but unless you can do it, you're just kind of throwing wishes into a well, basically, right? I mean, inaction is an action, right? And if they don't do anything, then things get much worse. I mean, at the end of the day, basically, they put themselves in a box. I mean, yeah, they have, and they're going to have to raise rates. I believe that. I believe they're going to have to. I've talked about it for the last year. And remember, I told y'all back in, what was it, 2018? Or was it 2019? Whatever it was. I think it was 2018, the summer there, where the Feds came out and said, we're going to raise rates 5 times in the next year. And I said, no, this was the last rate raising here. As I said, as a matter of fact, they're going to lower them within a year. And that's exactly what they did. And now they've been saying, oh, we're not going to raise rates, which is why they're doing all this QE to try to affect the yield curve. They want to work on the back end of that yield curve, right? And that's all fine and dandy, except, you can't just keep doing it just because you want to do it. At some point, as Lavo said earlier, the rooster comes back to roost, right? Comes home to roost. And so then you're forced to do something. And it's going to suck. And it's probably going to make everything a lot more painful because this move up has been not based on anything other than the Fed intervening and creating this temporary kind of condition where people believe, again, all these zombie companies, we talked about this time and time again, all these zombie companies at the record numbers. Because everybody believes the Fed's going to bail them all out, it's going to do it. But at some point, the Fed's just going to go, listen, we've just got to bite the bullet and take it. Because there's just no way out of it. I don't believe anyway. So yeah. Yeah, Padge, good bringing up a great idea about interest rates there in the socioeconomic theory of finance. As he says, it's that central banks don't control them, but they can only follow the interest rates on short-term bonds set by the market. Yeah, exactly. As I continue to tell you guys, the Fed is reactionary, completely reactionary. It is not proactive, which means, unfortunately, whatever's going on with the Fed there, it's always going to be because it's trying to do something to respond to what's already happening. So at the end of the day, it's not that the Fed keeps the market from dying off or whatever. It's that the market does what it does, and the Fed tries to control it with this stuff. But, the market's going to do what it's going to continue to do. The Fed can have some short-term, like I said, short-term bonds are the short-term knee-jerk reactionary effects on the market. But at the end of the day, the market's going to do what the market's going to do. Yeah, exactly. Thank you for bringing that up. Let me see here. Sean, what's going on, man? He says gold falling, foreign currencies falling, interest rates not really rising, USD popping. Sounds more like deflation that you've been talking about forever. Still people talking about inflation. Yeah. Again, I think overall that's what it's setting up for. I don't think, we're there yet. We're going to have to go through some disinflation first, but I think the deflation argument is a lot stronger, especially now, than inflation at this point. The inflation, like I said, we have here potentially just that inflationary spike before the Fed gets out there and says, oh, God, we got to do something now. And, whatever they're going to do is going to have that, that worse effect on the market and kind of overcorrect because it's already overpushed. The short-term overcorrection leads to a longer-term movement. Yeah. Let's see here. Wazobia Dollars, what's up? Which books can you recommend to fully understand inflation, deflation, and stagflation? I don't think there's anything out there that makes you fully understand it, but this is one I continue to tell people they should be getting and looking through, the socioeconomic theory of finance. Because inflation and deflation, which are, by the way, are not opposites. Again, guys, follow Colorado Travis there on Twitter. He did a great thread not too long ago. I think I showed it on Monday stream or Friday stream, where he talked about how inflation and deflation aren't like black and white. They aren't opposite. They're two different things. But they all result from the way in which the masses act and react in totality, which is why the socioeconomic theory of finance is such a great read. Again, this is, I'm so impressed with the book because spending 25 years in the market and then finding that book that was just released a few years back, that book basically just spells out what I have come to understand the market as over this last, quarter of a century now. So to see somebody actually put all these ideas into things, and then I go, oh, wow, okay. So I'm not that special. There's actually a way of thinking here. And other people think the same way. That's why I give it to you guys in the hopes that maybe you don't spend 5 years and a whole bunch of money like I did before you get serious about trading and understanding what's really going on. Before you take the blinders off that new traders always have as we start out as traders. Yeah. So that's a great book there. Let me see here. So that's kind of where we are with this. Again, just looking for DXY to find its support and get a reversal on that. Again, looking at, wave 5 still to come, working on wave 3 right now. Looking for a reactionary bounce, a reversal off this pivot area. Now, again, it could drop through to the 38.2, just a little bit below and then go. But initial target is this pivot area here, heading up, which then, again, should have a little bit of a negative effect on Bitcoin and stocks and whatnot as it rises. So we'll see how it goes there. I mean, TLT here, this is good, showing what the market's feeling right now. And again, I've got that as a wave 4 right here. So I've got this as a 1, 2, 3, 4. By the way, this is 5 of 3 is what I have this. TLTs, again, remember, these are your long-term government securities. They are considered the safe bonds out there, the treasuries, because they're guaranteed by the full faith and credit of the government. So really the only way you lose money on these bonds, which are in this TLT here, are if the government defaults. Basically, it burns down. If your government burns down, basically. As long as the government's there, your investment in that's protected. So again, when people are unsure about the markets and going into risk off and feeling scared, they move to TLT. And then if we look at that again, we'll look at what we've been doing lately, which is TLT versus junk. Remember, junk, your junk bonds basically are what Michael Saylor was giving out. Your junk bonds are basically what Tether, remember we looked at Tether, how much it has in it. We looked at the backing, and we found that over 50% of that nonsense was these basically these junk bonds. And we said, depending on the quality of the junk bond, it may not be enough, because if it's really crappy junk bonds, really bad, kind of poor businesses that are giving them the bonds, then if everything comes crashing down and they go to get their money back out of those bonds, the money may not be there. So remember, the idea here with the TLT junk ratio here is that if it's drawing, or if it's decreasing, people are moving out of those long-term government securities and into your shorter-term corporate bonds, which is more risky. So as this ratio goes down, that means you're in a risk-on environment. But when it goes up, remember, this is March of 2020 here. That's that big drop, right? And so this goes up, and what this means, it's risk off. Everybody gets out of the corporate bonds and into the long-term government securities for safety. And again, we've got this wedge going down here. We found support right on this previous area support resistance here. And now we're getting this breakout, which potentially says we might be heading up higher. Now, we could go still lower here down to the S1 pivot. But for now, we may potentially be heading up and out of here. And so if the wedge is legitimate, then the target is up here at about 1.62, which takes you above the pivot, which basically means risk off, because people are getting out of corporate bonds and getting into long-term securities there. So if we're doing this, I'm not sure how Michael Saylor does with the extra $1 billion that he wants to raise, to buy more Bitcoin. So, that could get really interesting for him if you see this kind of thing rising here. Let's see here. As far as silver goes, let's look at oil here real quick. Oil. All right, oil. We had to do an adjustment here recently. Instead of this being 5, this becomes 4 here. And then we've got basically 1, 2, 3, 4, 5 is 1, 2. It looks like we've got a 3, and a flat correction is a 4. I've got a 5 up here toward the top of this ascending range here, the R2 pivot. But here's the thing. We've got just a slightly higher high. And that maybe it becomes a really short 5. Let me see here. Here's what I'm looking at. Let me kind of get all this put in here. Let me just make sure here. This looks like a triangle right here. So if that's a triangle, this would probably have to be a 1 here, 2 here. We get a 1, 2. No, that wouldn't work because this is 1 here. 1, 2, 3, 4. Yeah, it just looks like a triangle. I don't think it is, though. It just goes 1, 2, 3, 4, 5. Man, this could still be wave 4 playing out here. ABC down, ABC up, and 5 down here. What you need to see is an impulsive breakdown below this 1 hour, 4 hour pivot here. And that should tell you that that wave A is done. And then if wave A gets up here toward, this area up here around 74, 74 and a half, then we'd look for wave B to kind of come on down toward this S1 pivot, most likely 69.70 here with this yellow box. But if this were to be the top here, that would drop down a little bit lower. But overall, what we're looking for is, I think we've still got some further upside here. May just be a 1, 2, and then you get 3, 4, 5 head up. And then we'll look for that move down with crude there. Let me see here. Could I do XRP and ADA? XRP and ADA versus what? Bitcoin, the dollar? What are you looking at? Let's see here. While you're telling me that, let's take a quick look at silver here. So I've still got my count as it is right now, which says, okay, maybe a 3, 4 may be short and we're heading down to 5, or this is just an A and a B and we'll head up here for 4. Breakdown below wave 3 brings up that wave 5 target down there around 24.94, secondary target of 24.12. But as long as it doesn't break down below that and it curls back up above that swing high, we can look for wave 4 to be up here around 26.535. Now, here's the thing. I told you guys that the other possibility, remember, I've got this as an A, B, C for B, and then we've got C that's going to take it back down here, $10, $8, whatever down there, right? The other possibility is that this is a A, B, C, D, and this is E here. So this becomes, instead of A, B, C, it's A, B is a triangle, and C up. And in that case, we're looking for a breakout above this swing high right here, this recent swing high in May of 28.90. If we can get that, the odds are that price is going to head up to around $35, $36. Let me see here. I'm going to go ahead and measure this just in case, and then I'll talk about the other side of this. Send that backward. Actually, send it to the back. There we go. Just want to get this up so I can see where this is here. All right, so then based on the height here, let's say this is A, B, C, D, and let's say we're at E here at the bottom. Based on the height of the pattern, right there around $34 is where we get C. So A, B over here is a triangle, and then C up. Okay, it's only if we break out there. Now here's the thing. If we break down below this swing low right here, this one, because remember this would be A, B, C, D, E. So if we were to break down below here at 23.74, that invalidates this triangle, and my count remains valid at that point. So, you know, we've just got some seeing. Do we break down below here? Do we break out above here? Locally, the count that I've got here sits as it does at a potential I've got other things going on here. Let me see here. I guess I got to get rid of that. Maybe that's the right one. Look like I did on another time frame and then brought it over. Anyway, if this is 3, then potentially 4, or, you know, 4 is done. I think it's an A, B, and it'll have a C up there. And then we'll come on back down here lower to get your other 3. Gold is looking worse than silver. Gold's still the weaker of the two. We've been tracking this for a while, this weakness. But same idea here. Potentially wave 4 still up, then wave 5 down at the descending channel EQ. My problem with potentially with the count is that this isn't impulsive here. So, I mean, you know, again, you look at a 1, 2, 3, 4, 5 is 1, 2, and then 1, 2, leading to a larger down. Or this becomes basically maybe 1, 2, 3, 4, 5 is an A, a B, and a C. And then it moves up here, in which case then this becomes A, not here. This becomes A up here. This becomes B. And then you get C up here to, you know, a minimum of 22 to 2300 on that move up. And so, you know, both of those could potentially rise a little bit and finish out and then come back down. But if we're dropping here below like this 1588 kind of level here, if we're getting really below, you know, below that, especially below this high volume node here at about 1500, that really says that this is the top right here and we're correcting. So yeah. Let me catch up. You were asking here XRP on USD. Oh, excuse me, a long night. All right. So we were looking at this as 5 down. Looks like it's dropped a little bit lower than what I was expecting last night. But let me see here. Let me see how this affects the count. Let's see here, 5, and then 1, 2, 3, 4, 5. I mean, yeah, no, that makes sense. Again, the idea would be that you get a 1, 2 here, and then a 3, 4, and then a 5. And that could potentially be the bottom, just like could potentially be the bottom for Bitcoin. Let me see here. We'll zoom out here in a minute. So 4 hour. I've got possibly, see, this takes it well back into, so I have two ways I'm looking at this. Kind of zoom out a bit more here. Let's see. Right now, this is a potential leading diagonal here with this drop down. As you notice, price just hit the 1 hour S1, so we moved in sideways. The daily S1. We moved in sideways between the pivot and the S1. We're finding support here, getting a good daily wick here. Look at this daily candle. You see volume rose here at the bottom. RSI dipping into oversold. Stoke RSI, not bottomed out, but in oversold, potentially trying to cross bullishly here. So there's a lot of possibility that this becomes, where it's going to head up from here. I think the easiest thing to do at the moment, let me make a copy here real quick. So I can mess with it a little bit. I think the best way to look at this is we've got this structure right here. Structure support's looking pretty even. Let's pull this up here to the resistance. You're finding support along the way here on the EQ and resistance, so that's probably pretty good there. So what I'm looking for at this point, let me see. Yeah, if this is done, we're going to want to see a nice impulsive breakout above the EQ here. If we get that, the target becomes a descending resistance. If we break out of that, then based on the height of this descending channel here, you got a target of about 0.99348 above the point of breakout. So basically almost, doggone it, almost $1 above the point of breakout. Heading up there. So that's what I'd look for. That's what I'd look for there. Yeah, see, just a cursory glance here real quick. Let's see. Yeah, that's bigger. So 1, 2, 3, 4, 5. So it gives us a 1, 2. 1, 2, 3, 4 is a triangle. A, B, C, D, E. 4, and then 5. So now we have 1, 2, 3, and then A, B, 1, 2, 3, 4, 5. C. And then that gets us back up there. So I don't think, XRP above $2 is out of the realm of thinking at all right now. Again, especially if it gets this bounce off this S1 area here and breaks out back above the EQ and then above the channel resistance and then above the high, the high here. And that just brings us up to, again, working up toward this all-time high area, working up there. Remember, we always talk about your first subwave or your first wave up is generally going to find termination around the wave of the previous degree there. So in this way, your high here, this first set of 5 waves up should find a termination point right around this area here. Generally, it doesn't happen all the time, but generally that's what happens with it. So yeah. But that's what I'm looking at the moment here with it. It looks like it just dropped down a bit further than I was looking for it to drop down, but the area that it's finding support looks like a good area to find support right there in it. So yeah. Scott O'Hara, what's up, man? I know it's impossible to know, but I see a lot of people saying the top is in for Bitcoin. But a lot of people who use Elliott Wave saying it might not be. Any reason for this? Yeah, because if you're using Elliott Wave, depending on how you count the structure, it could show that there's more up there. Sure. Again, the people who are saying it's at the top. Okay, so Elliott Wave is a way to forecast, right? So it gives you, it's under the idea that people act in a certain understandable way. You know, the market is not random. People act in a certain way, and we can generally kind of follow this. And that's what it is. Now, with Elliott Wave, it doesn't guarantee that price is going to go up higher, because depending on what your count is, if you drop below a certain level within that count, it says, you know, that's wrong. So there's a couple of ways to look at it with Elliott Wave, which we've been doing, you know, throughout for a while now, ever since the bottom there. And, you know, as it moves up and does what it's doing, there's different ways of looking at it. Again, you can look at this as an ending diagonal with a different count, which gives us 3 up here. And in which case, if this is 3 up here, then this is just A. 5 down is A. You'll get 3 up for B, and then you get 5 more down for C. So but the other count we've got here that I'm looking at right now is a potential flat correction here. So you get 3 up here, A, B, C down, A, B, C up, 1, 2, 3, 4, 5 where we are. But in order for this count to confirm, price has to get above wave B up here. So there's a lot of things that can happen in there. So that's why it's important to understand what your possibilities are as it's moving, which is what we do with TWC all day, every day. I don't ever guarantee that price is going to do a thing. I say, these are what my thoughts are. This might be happening, but this is what you have to watch for. First of all, these are the specific levels that you need to come through. You know, and going through consecutive ones, you know, adds more confidence to what you're doing. But there's always a major level that you have to actually get through to confirm where you're at. And I also let TWC know, listen, so that's one count, but here's the thing. If it doesn't do that, and it does this instead and gets through this other level in the other direction, then that says that it's going in that other direction and not what we thought, you know, the other way. And that's what's really great about Elliott Wave, is because it gives you these rock solid validation and invalidation levels. So you always know whether your count is right or wrong, you always know exactly where your count becomes invalidated. Which means if you're trying to put in a stop loss, it's where it is. And why is that important? It's important because if your count turns out to be wrong, and you know, like let's say you're looking for price to you think it's maybe doing a leading diagonal, okay? So 5 overlapping waves up. But you know, if it drops below that wave 2, that you're incorrect, right? Before it hits those 5, that you're incorrect. So you think it's doing this right here. You think price is doing this, right? And that's why you entered, because you think this is what it's doing, right? So maybe you entered somewhere over here. But let's say all that price actually does is this, right? Let's say it goes like this, like this, like this, like this, like this, and gets down here. Now, if it does this, obviously your count in red is wrong. But because you drop below wave 2 here, you know you're wrong. And it doesn't matter how far it goes or what else is potentially going on. You know that your reason for entering that trade is incorrect. And this tells you, get the heck out and reread it again and try to find a different count and find a different entry. The problem as a new trader, this is why I like Elliott Wave, you know, for traders, is because a new trader, you know, they'll say, like, okay, well, I'm going to go if it drops below here. And so then it drops below there, doesn't follow through what they're doing, but then they hold on going, well, this only looks like 3 back, so it'll probably, yeah, I'll bet you this will go up like this, and it'll still head where I'm going. I was just off there, and they'll hold. But instead of doing that, what it does, this is what they think. Instead, what it does is this right here. So they thought it was going to do this, but it drops down and does this. Now, if you're doing Elliott Wave and you thought it was doing this and it drops below here, your butt should be out of that trade. No questions asked. No waiting for something else maybe. Your reason for entering the trade is no longer valid. Get the heck out. But new traders will generally hold on. And then it pops back up above this level and they're like, see, yeah, I'm good. And then it doesn't get above any higher. Instead drops down even lower here. And they just can't make that mental I need to sell because now they're like, man, I should have sold, here. I should have sold here. I should have sold here. Now we're way down here. This is too far. I've lost all this. And so they don't sell and they keep holding and they get liquidated or finally sell right at the bottom before price turns around, heads back up. But what they should have done is got out here, wait to see what's developing here, and look at this. Because then you look here and you go, okay, 1, 2, 3, 4, 5. Maybe this is ABC, ABC, and this is 5. So maybe this is a flat. And now we're heading up. So there. So yeah, when you ask about your Elliott Wave and whatnot, it's because the possibility is there. Again, if we look at my chart, or we can actually look at the bigger chart here, longer term chart. Again, the count says it's possibly just finished wave 3 of 3 here. And we get some support with that idea. This would have to be, again, a flat correction. But it ends, as we saw, right here at the, let me flip it back around. Get this back down to 3 here. Oops, wrong one. Interior 3 right here. This wave 3 right here, it ends at the 38.2. And we know wave 4 generally targets the 38.2. So in this count, there's support there, reasoning for it being this count. It works out in terms of your fib levels. Yeah. So yeah, just something to think about there, Scott. That's why you have Elliott Wave saying there's possibility, because Elliott Wave is a forecasting tool. Elliott Wave tells you where price may be headed, whereas the other ones are just kind of looking at general areas of support and resistance and maybe local structures. And there's a good thing to think about it, because again, if this is an any diagonal here, 1, 2, 3, 4, 5, it's possible this is a larger 3, or even that it's 5, but you would have to drop down lower to kind of confirm that. Right now, if we get a reversal up here and we're breaking above wave 4, it starts adding confidence to the idea that this count is legitimate because the fibs work. The fib levels that we look for work. So I hope that makes sense. Yeah. Almost like there's a method to the madness, Hank says. Pretty much, right? Sean's asking about lumber. He says, finally dropped a little. The housing market going to tank along with everything else. Oh, if everything else tanks, yeah, the housing market should be in there. Yeah, there's no way it shouldn't. Then he says he's been legit waiting to finish a project he started in the spring. I know, right? Those that wood prices, man. Whew. They got high there. We've looked at lumber here recently. We can go look at it again here. I haven't looked at it since we looked at it that day. Probably last week sometime, I think. Yeah, there's that big 3-month candle. I think we've got potentially 5 up. Which means if we do, I'm looking for to get way back down here around 261, 287 at least. So yeah. Oh man, I love that movie, Black Man's Guide to Bitcoin. Trading Places. If you guys haven't seen that, you need to see it. It's the great orange juice trade. Eddie Murphy in there. Great movie, guys. Absolutely great movie. You should see it. But anyway, yeah. So the quarterly, I, if this quarterly, this month here, at the end of this month closes out at least like this, I just don't see how you recover for that. Now, the higher it closes, the more possibility there is, but it's still really bad. There's a lot of wick up there coming down. But I can get 5. 1, 2, 3, 4, 5 gives us 1, 2, 3, 4, 5. So I mean, I can get 5, which again would then likely have us heading back down here to that 250, 300 range at least, potentially even down here around 175 or so. It's 78.6 on that. So yeah, pork bellies. Everybody talking about trading places now. Such a good movie. I'm telling you guys, if you haven't seen it, you need to see it. If you have an aversion, if you're young and you have an aversion to movies created and, filmed in the 80s, especially early 80s, well, do yourself a favor and watch it anyway. It's good stuff. A lot of good movies from back then. But yeah, lumber's still not looking all that great. And I'll be honest with you guys, I've been waiting for this. So, I'm looking to load up on real estate. If we get, the kind of downturn I'm thinking we're going to get. So, get some rock bottom prices on some real estate. And you can't be upset about somebody for doing that, because whether I do it or not, the market's going to do whatever it's going to do, right? And people need to sell. So I'm going to be there to buy. Probably mostly from banks, because the banks are going to get a heckload of foreclosures as a result. So yeah, good times, right? Yeah, let's go here. Well, we got Bitcoin trying to push up again now after a little small pullback there. Let's see here. Oh, man. Hank says he learned about futures and pork bellies from that movie. I'll tell you what, man. If you didn't grow up in the 80s, man, you did not have a proper introduction to finance. I mean, especially here in the U.S., it was all about corporate rating and other people's money. We had movies by the same name, Danny DeVito, Other People's Money was a movie. You had The Wolf of Wall Street, the original back then. Gordon Gekko, Greed is Good. You had all these real entrances into how it was all happening back then. Again, trading places. All these great movies back in the 80s. I mean, I think really that whole 80s kind of thing was really what brought me on with my with my interest in finance back then. So yeah, they were silly and so much fun. Definitely simpler times. And it's funny that you say that, because here in the U.S., and in Russia, I assume in Russia, everybody, concerned about the Cold War, right? And I grew up in the military as a military brat, so my life revolved around the Cold War, whether I liked it or not. So, you say simpler times, and it really was compared to what we're dealing with today, yet we had the whole World War III potential, So, Brewster's Millions. Oh, that was a good movie too, yeah. Richard Pryor. He had to spend, was it 30 million in 3 days or something like that? Something like that. It was good stuff. Had John Candy in it too. I mean, this has devolved into all the great movies of the 80s, right? Slasher movies and hot girls of the 80s. Yeah, you had all those B movies. Yeah, see, if you're too young to understand what we're talking about here, man, you guys missed something, seriously. Yeah, 30 million in 30 days. He had to spend 30 million in 30 days and have absolutely nothing to show for it, just to get $300 million inheritance. The day after scared everybody. It sure did. It sure did. Anyway, guys, listen. I'm done. I'm out of here. I love that we ended up with some 80s movies. It's always good to laugh and smile a little bit. 80s music still amazing today. Yes. Yes, though it's often found in the elevators nowadays. Rogue Trader, about the guy that lost at the bearings. Yeah, I think so. I think it was Liam Neeson, wasn't it? Yeah, I think so. Anyway, as always, guys, I've had a fantastic time with you all. Thank you so much for joining in. Like I said, you can join us here at howtotradetowin.com. Go right here to join us. Go to Tier 3 Annual and then put in the 50% off Tier 3 coupon code. I put it earlier. I'm going to write it one more time here. Off Tier 3. Or is that 50? Or does that say 500? I don't even know what I wrote. We'll try it one more time. Just to make sure, in case you guys try and copy and paste. Off Tier 3. Anyway, guys, like I said, that'll get you the cheapest we've ever done it. It will get you a year with us for about almost 70% off your month-to-month price on the Tier 3. So huge savings, guys. So if you've been thinking about it, if you're serious about wanting to trade, learning to trade, how to do it properly, and have support along the way, man, jump on in there. We'd love to have you with us. Well, you've seen a lot of our members here talking during the stream. So they're great people. My sister moved yet? No, my sister, actually, they just packed up yesterday. She's going to take her time coming down, so they'll be down here probably about Friday sometime. And when's her first stream? I don't know. I'll have to talk to her about it. Like I said, it'll probably be art related. If so. Anyway, guys, hey, listen. I appreciate you all joining in. As always, I'll be back on Friday at 11 a.m. Central Standard Time. Again, we'll do this all again. We'll take some look at some stuff, give you some pointers, some tidbits. But really, man, it's nothing compared to what we do there on a daily, weekly basis in TWC. So we'd absolutely love to have you there if you've got the desire to learn to trade. You can learn to trade. Don't get me wrong. You can learn to trade. And most people won't tell you. You can learn to trade by reading the free stuff online. The problem is you're going to have to go through a lot of mistakes along the way. And so it's going to take you exponentially longer. Again, I've kind of said this the same way before, guys. When you learn to do something, if you spend a little bit of money to get somebody who does it well, to help you along the way, a coach, a mentor type thing, you're going to slash out a lot of wasted time and energy. And in the case of trading, a lot of wasted money. It just depends on how you want to look at it. Me personally, anytime I learn something, I'm always trying to find somebody to help me learn it. I'm willing to pay a few bucks because the less time it takes me to learn it, the better off I am, right? If I can miss a lot of the mistakes and whatever you do along the way, I'm all about that. So anyway, just a way to think about it. I hope you have a great day. Y'all take well, be well. Have a great week. Remember, the only thing you control in the market is how much you lose. That's it. So keep working on risk management, all right? We'll see y'all on Friday or over on Discord. Take care.